The year is 2050 and the S&P 500 is still ranging between 4,000 and 4,200. Guys, the stock market has been literally so boring to trade over the last couple of weeks, with the stock market literally going sideways for over a month now. From an intraday perspective, this has been one of the most exciting times to be a trader. However, from a longer term perspective, this has been one of the most frustrating times ever. However, things are about to get a lot more interesting. Guys, in today's video, we're going to discuss both the bullish and the bearish scenarios for the stock market using both technical and fundamental analysis. Guys, even though the stock market has been ranging for over a month now, things behind the surface are not looking great. Things are deteriorating quite a lot, and there's a lot of things, a lot of important things that we have to discuss that may be damaging for the stock market. And just before I start, guys, and go into a lot more detail about this, if you do enjoy today's video, guys, then please give it a like. It does help us a lot, and do share it with anyone else that may also find it useful. And if you are new to our channel, then please consider subscribing. We do bring out the latest stock market analysis outlook every single Monday morning. Now guys, we literally haven't gone anywhere since the end of March, with the S&P 500 just going sideways since the end of March. Now we've discussed this previously in the previous video, but we've seen this before. We've had a massive rally since the end of December into beginning of February. Then we had a consolidation for a couple of weeks, and then we had the big correction towards the latter part of February and into March. Then in March we had a big rally, and since then we've just consolidated and been going sideways since. Now guys, until we break this range, there is no real direction. However, as I've mentioned before, things behind the surface are not looking great. We have interest rates that are at a record high. We have liquidity that is being drained out of the system. And in my opinion, the consolidation that we've had over the last couple of weeks, and the reason that we haven't crashed already, is because of earnings. Earnings, guys, in big tech companies, in the major cap companies, Microsoft, Google and Apple, they've held up. They had good earnings, guys, and because of that there was no catalyst to bring the stock market lower. Now we've previously discussed this before, guys, that the reason we've rallied so much since the beginning of the year is because of those mega cap companies. There's about 5 or 6 companies that have actually rallied and taken the stock market with them. If they weren't for those companies, there was no way we would have rallied so much. So just think about when those companies will start pulling back. They will take the whole stock market with them, and we'll be discussing this later in the video. Now, one thing I wanted to point your attention to, guys, is something that happened on Friday. And on Friday evening, to be more precise, we've had consumer credit in the US. And guys, look at this. The consumer credit in the US is at a record highs, 26.5 billion, guys. The expectation was for 16 billion. Everyone is just ramping up their credit cards. They are ramping up their credit cards where the interest rates are at a record high. I mean, it's fair enough you go and use your credit card when the interest rates are close to zero, as you know your interest rates, your interest on your credit won't be as high. But when you go and max your credit card and the interest rates are at a record high, what's going to happen when you lose your job and you won't be able to repay it, because the interest rates will keep going higher and higher from month to month? What are you going to do? Your minimum payment will keep going higher and higher instead of going lower and lower. What are you going to do then? Guys, I believe that is a catalyst that would happen in the stock market that will bring the stock market down. That will happen in the economy that will bring the stock market down very, very soon, guys. So be very careful. I don't know what the catalyst will be, but I have a feeling, and just looking at that, something behind the surface is building up to be a catalyst to bring the stock market lower. And guys, just be aware of that, because we also have the banks. The banks are, we've had a couple of banks that have been going bankrupt, and I believe the next in line is real estate. We've had banks collapsing. Now in my opinion, I think we'll have real estate collapsing, because we have high interest rates. The mortgage, in order for you to get a mortgage now, you'll have to pay so much in interest. So what's the point? And we also have, if people are not buying as much, there's a lot being produced at the moment. So what will happen with those properties that are building up? And also, what will happen to people that are trying to sell? They're trying to sell at a higher price. No one is buying, so you have to lower your price in order to sell. So there's a lot of things out there, guys. And if real estate, that's exactly what happened in 2007, guys. Remember that we had people buying 3, 4, 5, 6 mortgages. They were owning 5, 6, 7 properties, and something was about to burst. Now we have record spending credit cards, records high interest rates. Something is about to burst. Okay, it may not happen tomorrow, but it would most certainly could happen by the end of the year. Okay, so bear that in mind. Now let's quickly go over what happened last week, guys. Now last week we've had the S&P 500 starting the week, because of the negative news that we got from banks, started crashing literally since Tuesday. Now guys, we had some really good opportunities last week. Why? The price has gone all the way back down below the lower expected move for the week, and it's gone all the way down to clear the liquidity that was resting below this low at 40.50. Guys, the 40.50 level is one of the most important levels you have to watch in the stock market and in the S&P 500. If we give way to this level, that's it, guys. We are going way lower. However, if this level is holding, and it did exactly that last week, we've literally cleared the liquidity, started to consolidate. We had positive divergences, being close to oversold here on the RSI. We were way below the lower expected move for the week, and this was a perfect buying opportunity. If you bought here, guys, what happened after that? We rallied to close the week all the way up above the lower expected move for the week, and that's exactly what we've seen happening so many times in the past, guys. Okay, now just before I go into the technicals for this week, just want to go through the calendar for this week, guys. We have some very important news. Now the earnings are gone. We have Disney reporting this week, but that's about it. We have some very important news to be aware of, guys. On Wednesday we have inflation data, and guys, if inflation is coming back because of a weaker dollar and because of any other catalyst that we have out there, that will be very negative for the stock market, because they are calling for what? They are calling for a pause, and they are calling for interest rates to go lower now. How can you go lower if inflation is still going higher? So that's something very important to watch on Wednesday. And we also have more inflation data, guys, on Thursday. Very important. Watch those two economic news for the week. If inflation is coming back and it's higher than expected, guys, that's going to be very negative for the stock market. Now let's go back and discuss the technical analysis for the week ahead, and start off by discussing the S&P 500. Now guys, I've mentioned previously that the 40.50 level is one of the most important levels to watch. Watch this level, guys. If we get a close below this level, then we'll and if we get a continuation, then I believe we'll be going a lot lower. And the first target, guys, would be the daily IC at 39.80 or so. Okay, Watch this, very, very important, guys. Now, as I've mentioned before, we are in a big consolidation range over here, and we've been so for over a month now. We may have false breaks, okay, either above or below. Watch out for that, be very careful. As it stands, we are consolidating here for waiting for a next major move. Now, guys, if we do go higher from here, then we do have the liquidity zone just above this level at 4190, and we have the gap which is above that, and we have the upper expected move here. If we do go up higher, guys, at any point during the week, I would look around this area here for a consolidation and a possible short opportunity right in around this area here, guys, and especially right at this gap here. I will expect this gap here to act as what, as a resistance for now. If we go lower, guys, very important, as it stands now, the S&P 500 we had a massive rally on Friday coming from what, from oversold conditions here. If we do go up higher to clear that liquidity and we go up straight in a straight line, then we'll be overbought, perhaps with some negative divergences. So quite a few things there to use for a possible short opportunity. If we do go up lower, guys, because of any news perhaps of the CPI data, then watch out that 40-50 level, guys, very important. I would expect this level to either act as support or resistance. So if this level is broken, then I would expect this to act as resistance, and if we go down to that 39.80 level, very, very important, guys, watch that. And one other thing to watch, guys, will be Apple. Now, guys, we've been discussing this, and this analysis we completely smashed this analysis. We've had that inverse head and shoulders, and that has played out very, very well here. We've had the trend line was broken, came back to retest the trend line, and off we go all the way up to try and clear the liquidity resting above 176. Now, guys, this is very important here. One of the major reasons that the S&P 500 has rallied is because of Apple, and especially on Friday, Apple rallied 5%. It hasn't rallied 5% since 2019-2020. We haven't had a day where Apple has rallied 5%. Now, this is becoming a bit overextended now, in my opinion. And the next thing to watch, guys, will be, well, if we clear that liquidity, what will happen next? Are we going to see some consolidation here, and off we go back to retest this trend line? Also, guys, one thing to note here, we have a couple of gaps here that have not been filled. I mean, we've opened up in the morning and we opened with a big gap up and another big gap up here as well, guys. So one gap here and another one here and here as well. So we have a number of gaps here, guys, that have not been filled. Now, those gaps, they always fill. So watch for that. Watch for price to come back and try to fill those gaps. If Apple is taking a hit, guys, okay, then expect the whole stock market, the S&P 500 and all the other major indices, to take a hit and go lower. Be very careful on that, guys, okay? If the major companies are becoming overextended, that's a reason for concern. Be very careful, guys. As it stands, we are meant to open here on Monday, right in and around where we close. So there shouldn't be a major gap here on Monday. Because of that, watch to see whether we clear the liquidity, and if we do, what happens next. And if we don't clear the liquidity and we go lower, then watch for those gaps to be filled, and watch to see what the reaction is once those gaps have been filled. Next, guys, let's talk about the UK 100. And guys, well done to you here on the channel. We completely smashed this analysis, guys, and we've been smashing the UK 100 analysis for a while now. Just 2 weeks ago, before I went away, I talked about price looking to have a reaction out of this daily IC. And guys, I did mention, and if you don't believe me, go back and watch the last video that we posted. I said I'm looking for price to have a reaction from here and go all the way down to the daily IC. This will be the first take profit target, guys. What happened here? Price came perfectly to the 1 day IC, touched it and then started going in the opposite direction. That's exactly what we were looking for, guys. 100% smash this analysis. Now, what can happen next year? First of all, there's a bank holiday here in the UK, so there's no trading on Monday. That's the UK 100, the FTSE 100 will open back again on Tuesday. As it stands, guys, this still looks very bullish for now. And if price goes higher, I'm expecting price to clear that liquidity and perhaps go and clear this liquidity up there. If we do lose this 1 day IC, guys, then I'm looking at the next IC here as a potential take profit target, next take profit target for now. As it stands, we are still on a sell signal, so as long as we are able to hold this and not go above this level, guys, then we are certainly able to go a lot lower. But just bear in mind that this looks very bullish, guys, and it does make sense, you know, for it to keep going higher for now. There's nothing bearish about this chart. The only thing that's bearish is that we haven't been able to make a new higher high. So as long as we are not able to make a new higher high, then definitely we are able to go down to at least this level here, guys, for now. If there's more negative, if there's a big catalyst in the market, then we are going to go all the way back down below this IC, guys. That's for sure. Next, we get the DAX here, and guys, the DAX has literally done what? Has done nothing as well over the last couple of weeks. We've literally been in this consolidation range for over a month now as well. However, one thing to note, especially if you go over to the weekly chart here, guys, we are getting a bit overextended from the 20 EMA. Normally, every time we get extended further away from the 20 EMA, guys, we get a pullback, either a consolidation or a pullback to wait to the 20 EMA. One thing that we to note here, guys, we do have the big liquidity zone here on the weekly, right in and around this level here, which is at around 16,100. We may see a false break here upwards to clear the liquidity and then a move all the way back down. Now, what we're expecting here, I'm expecting a move, the first take profit target to be right here at 15,540 to clear the liquidity resting below this area here. This will be the first take profit target, guys. In the longer term, for this year, I'm expecting a pullback down all the way to this daily IC, guys. This is what I'm looking for as an ultimate target for 2023, all the way down to 14,050. When are we going to get that? At some point. If we get some major catalyst, guys, that will be the target to go for. For now, this is consolidating, waiting for a major move to happen. Nothing else to say about this for now. Next, we have US 30, the Dow Jones. And guys, here again, we smashed this analysis. Before I went away, I talked about this level here, this daily IC, how I was expecting to see a reaction from here all the way down to clear that liquidity. The price cleared the liquidity and immediately reversed to go higher and clear the top liquidity there, guys. Now this looks very interesting here. One thing that we have on here, if we go over to the 4-hour IC, 4-hour time frame, we have this trend line here, guys, on the 4-hour time frame. We've broken the trend line last week. What are we doing now? We are retesting this. As long as this trend line is able to hold here, guys, then I'm expecting price to go lower all the way down to the 1-day IC sitting at 32,540 or so, guys. Okay, this level here, as long as that trend line is able to hold the retest. As long as it's able to hold the retest, we may see lower prices. If it's not able to hold that retest, guys, I'm looking for price to potentially go higher. Now, what's happened here? Here looks like we had a false break for now, and unless we able to go back down and hold that retest on the 4-hour time frame, then we can go higher to clear the liquidity resting above this area here, guys, around 34,500. where we may also have another false break at that point. So be very, very careful on that, guys. For now, it looks like a false break is back in here, back in the consolidation, back in the range. Not a lot happening here, guys. Okay, just watch the 4-hour time frame for now. See what we can get from it here. Next, we get the NASDAQ, the US 100. Now, guys, this looks very bullish as it stands. All we've done over the last couple of weeks is literally just consolidated here. Now, on here, we do have this daily IC here sitting at 13,444 right in here. If we do go up higher, I will expect price to have a reaction out of that. But also don't forget about this liquidity area sitting here at around 13,750 or so. Price may also want to have a glimpse higher here to clear the liquidity before we see a major pullback down. In terms of pullback, guys, the first take profit target will be around here at 12,500 or so. And we need to see and monitor to see what price wants to do once it goes once it clears the liquidity around here, guys. But just things to watch, guys, are very important. Watch Apple and also watch to see what the CPI data, the inflation data, will give us on Wednesday and Thursday, guys. On here, on the 4-hour time frame, we've got this liquidity zone here. As I mentioned before, this looks very, very clean, guys. I'm expecting this to be taken at some point in the next couple of weeks. We are going higher here with negative divergences, guys. Okay, so it looks like we are going higher with not a lot of momentum. Okay, this can be perhaps to trap in a lot of buyers who want to buy up here, and then they just push the button, okay, and then take the prices all the way down. Be very careful, guys. Be very careful about buying up here. Okay, I would say intraday you can do so. Long term, there will be other buying opportunities at lower prices, so be very careful on that. The next, guys, we get the VIX, and on the VIX, guys, we got the first positive, the first up week in around a couple of weeks. We've had a lot of down weeks, and this is the first up week that we got in a very long time. And this looks like an inverted hammer as well, which can be bullish. And I was just trying to see if we got that back in the past as well, and we had that back in 2019. At the end of 2019, we had that inverted hammer here. We got a couple of weeks of consolidation, and then we got a major spike in the VIX, guys. Okay, this can be very dangerous if we do get that as well. So watch that very, very careful, guys. One thing to note is we are not able to go above 20. We cannot get a close above 20. This is crazy resistance here, guys. This is crazy. Once we are able to go and get a close above 20 and a continuation, that will put a lot of pressure on the stock market. Be very careful, guys, and watch this. So far, we've opened up with a gap higher. So we've got actually two gaps here, which we may try to fill. And if we do fill those gaps towards the beginning of the week, then I will look for price to go and try to fill the gap at 20. It left a big gap here at 20 on Friday last week. So fill those gaps, watch for the VIX to try and go up there here, guys. Okay, again, be very careful. Volatility can spike at any moment, especially if we get some major news announcements. The DXY, guys. Okay, here the DXY has done literally exactly as the stock market. Nothing has been consolidating over the next couple of weeks. There's a lot of talk out there about the DXY being finished and a big crash in the dollar. Now, I'm gonna say this. I think the dollar will have one of the best comebacks in history over the next couple of months. Everyone's talking down the dollar. I'm predicting that the dollar will have a major spike up in the near future. The interest rates are still at record high, guys. Okay, and as long as interest rates stay at record high and don't go down, there is no reason for the dollar to go down. If the dollar starts to get a bid soon, it will push up the indices, the stock market. Be very careful. As long as we are able to hold within this daily IC, guys, and not be able to close below it, then I can see us going up higher to try to clear. The first target will be to clear the liquidity that is resting above 106, above this area here. Next, if we do go below and close below this area here, guys, then obviously the next obvious target will be this daily IC sitting at around 96.5. As of now, guys, the dollar is able to hold that, and is also is below the 20 and the 50 EMA. Watch as a first potential reversal. Look to see price closing above the 20 and the 50 for now. Next, guys, we have gold here, and guys, on gold there's some major things that are happening here. First of all, we have the we had some manipulation done last week here, guys, which I think is very interesting, because we've had price going above, finally clearing that daily liquidity that has been resting all the way up here, and immediately after that liquidity was being grabbed, guys, and that was done at 11 p.m. UK time. It was done all the way in the evening when most European people were asleep. So they've done the manipulation there to clear the liquidity, and I was looking for that to happen if gold was to take a leg lower. And this is exactly what we got, guys. We got that liquidity clear there. Now we have plenty of liquidity resting below all those areas here, guys, and we have this daily IC sitting at around 1910 or so. So for now, as the dollar tries to get a bid up, I'm looking for gold to take a bit down. There is no reason to keep going higher for now, guys. There is no reason to keep going higher, especially as it's cleared that liquidity. Next, guys, we get Bitcoin here, guys. And a couple of weeks ago, I said that someone I respect a lot has called for the top in Bitcoin for 2023. But guess what? Since that day, Bitcoin has not actually gone higher than that. And I'm starting to think that that can be something that could actually happen. I think this can be the top of Bitcoin for 2023, and especially if we do get a correction in the stock market, this will not push up higher, guys. And we've just had the record withdrawal. We just had 400,000 withdrawals happen overnight last night. That is not a positive sign. You don't want to see that and be bullish on Bitcoin. The first target on Bitcoin here, guys, will be to clear the liquidity that is resting below this area here at 26.5. See what happens after we take that liquidity. Do we consolidate here to go up higher, or do we go through this, we carry up going lower, and then the next possible target will be this daily IC sitting at around 24.7. If we do break this as well, then the next target will be all the way down here at 20.4. and if we do break this as well, then guess what, we're looking for new lows for price to go and clear the liquidity and go below 16k, which if it does, will create some nice buying opportunities long term, guys, because at this point, if price does go here all the way down here, everyone will be so discouraged about buying Bitcoin, and then when everyone will be selling and be reluctant to buy, we go in and buy. Okay, so this will be the things to watch. Obviously, if we do go up and we get a crazy bid going higher here, and we go above this level here, or above 30, above this daily IC of 30k, 31k, then the next target, guys, will be this 8-hour IC sitting in and around 38,000. So this will be a crazy level, guys. Again, anything is possible, but for now this doesn't look very bullish, and it's also building a what, a head and shoulders as well formation. And if that head and shoulders will be broken right here, then guess what, okay, a lot more downside on the cards for now. Guys, this is pretty much it from me. Thank you very much for watching. Be very careful out there, guys. Okay, and if you do want to learn more about the strategies that we use and would like to also join the Discord community, head over to our website mcitradingacademy.co.uk, where you can find out more about the courses that we offer, and you can also join our free Discord community. Thank you very much, guys, and don't forget to hit that like button. Thank you, guys, and have a great trading week.